Hey everybody, welcome back to another dividend stock valuation video. Today, I want to take a look at the Coca-Cola Company, stock ticker KO. Coca-Cola is currently trading at $56.12 as of the date of publishing, October 2nd, 2022. This is an iconic brand with one of the widest moats in history. Perhaps one of the greatest brands of all time, and for this reason, Coca-Cola always trades at a premium. There is no question this is a pricey stock, but with the bear market of 2022, it is less pricey. I want to determine if this is a stock worth buying. I'll attempt to shed some light on these questions over the next 10 or so minutes here, so let's do this. This is the Dividend Growth Income channel. I'm Nick. Thanks for joining us. We love dividends and especially dividend growth stocks. If this is your thing too, please smash that like and subscribe as it helps us out more than you can imagine. I hope you enjoy this quick dividend stock valuation and analysis, but please do keep in mind I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend investing. Nothing in this video should be taken as financial advice. Investing in the stock market is risky, so please do your own due diligence. Also, I want to say thank you. Guys, I just hit 1,000 subscribers. My video on undervalued dividend stocks for October 2022 took off more than I ever imagined and went nuts, and I'm blown away as I just started this channel a few weeks ago. And I want to thank each and every one of you for taking the time out of your day to watch what we have to say here about dividend growth investing. Coca-Cola is the world's largest non-alcoholic beverage company with its products sold in over 200 countries and territories. They got their start by this dude, John Pemberton, back in 1885. Coca-Cola has been at this for 136 years and owns over 200 brands, many you certainly know. I don't own Coca-Cola stock at this time. Now, there are two reasons I would want to own this company. First is an emotional reason, a love of the brand. They make products that at times are a guilty pleasure and bring back fond memories. It may not be the #1 recognized global brand of all time, but name me 5 brands that are more well known than Coca-Cola. Now, this alone is not a reason to invest in a company. We should never invest for emotional reasons. Investing should not be emotional. There is a saying you may have heard, price is what you pay, but value is what you get. No matter how much you might love a company, it's possible to overpay for something. Now, the second reason I would own Coca-Cola is more practical, and that's because it's a dividend king. Coca-Cola has increased its dividend for 59 years straight, and they've been paying this dividend for over a century. This is impressive. Now, despite these two reasons, I've just not been able to justify paying this premium for Coca-Cola when there are so many other companies I see as better purchases for a dividend growth investor with a 10 to 20 year time horizon. My position. I am long on their #1 competitor and fellow dividend king, PepsiCo, and they're also a relatively expensive company. I see Pepsi as one of my core dividend stocks for the long haul, and one that I am okay paying up a little bit because of their fundamentals. That's a topic for another video. I also don't believe this should be an either or thing, as I would welcome a place for Coca-Cola in my portfolio at the right price. I do want to clear up one thing when I refer to these companies as expensive. It's not about their stock price. You want to look at the price to earnings ratio, which is determined by taking the stock price and dividing by earnings per share. Let's put this side-by-side comparison with another dividend king, Johnson & Johnson, ticker J&J. While J&J is a healthcare company, they do have a consumer products division that makes products such as Band-Aids and Tylenol. This division is actually being spun off into its own company in 2023. Again, another topic for another video. But J&J's stock price is in the 160s. But J&J is a cheaper stock than Coca-Cola. You're getting J&J at a 16 PE. While Coca-Cola, whose stock price is in the 50s, is trading at a PE of 21. This is something I see a lot of new investors get caught up on with low share prices. This is really more a function of how many outstanding shares the company has in relation to its market cap. Even companies with very high stock prices like, say, BlackRock or Broadcom, these are trading cheaper than Coca-Cola, although these are not really good comparisons based on their sectors. Now, as much as I love this company, the truth is, Coca-Cola has been an underwhelming investment over the last decade when compared to simply investing in a broader market index fund like SPY or VOO in the S&P 500. Now, in the last year, Coca-Cola is up 6.7%, while the S&P 500 is down minus 16.7%. A $1,000 investment in Coca-Cola on October 1st, 2021 would be worth $1,067 today, while $1,000 invested in SPY would now be worth $832.40. And this is why it's good to have some of these more defensive stocks during a bear market in the consumer staples sector, because they're not going to be hit as hard. Coke is down year to date, but not nearly as hard as the overall market. Now, when we look at the 5 and 10-year historical performance, the S&P 500 is the clear winner. You'd have been better off just investing there. The 5-year price return is 24.46 for Coca-Cola, while the S&P has performed 42.32%, and this is being recorded when the S&P has hit a 52-week low in 2022 in October. So if you invested $1,000 on October 1st, 2017 in Coca-Cola, that would be worth $1,244.60, while your $1,000 investment in SPY at that time would now be worth $1,423.20. The 10-year return for Coca-Cola is 47.69%, while the S&P has returned 148.89% over the last decade. A $1,000 investment in Coca-Cola 10 years ago would be worth $1,476.90, while investing in your S&P index fund would give you $2,488.90. However, this isn't telling the full story. Those numbers are only in regards to the growth of Coke's share price. When we're a dividend channel, Coca-Cola pays a handsome growing dividend, and this needs to be taken into consideration. By adding dividends received on top of price growth, we have total return. The 1-year total return for Coca-Cola is 10%, while the S&P 500 is down 15.47%. So a $1,000 investment made on October 1st, 2021 would have a total return of $1,100, while your S&P 500 index would have a total return of $845.30. The 5-year total return of Coca-Cola is 46.08%, while the S&P 500 index has a total return of 55.55%. So if you had invested $1,000 on October 1st, 2017, you'd have a total return of $1,460.80, and the S&P 500 index would have returned $1,555.55. The 10-year total return for Coca-Cola is 102.27%, while the S&P 500 index nearly doubles that at 202.44%. Your $1,000 investment on October 1st, 2022 would be worth $2,022.70, while your S&P 500 index would have a total return of $3,024.40. Now, normally, if I'm going to pay a premium for a company, and Coca-Cola certainly trades at a premium, I would hope I would be getting market-beating returns. Think Costco or Amazon. But that's just me. There is something to say for the reliability of Coca-Cola's dividend. And of course, past performance is not a guarantee of future results. And I'm also always a fan of an S&P 500 index funds. So let's look at the legendary Coca-Cola dividend. Coca-Cola has one heck of a dividend history as a dividend king. They're currently yielding 3.1%, paying a qualified annual dividend of $1.76. This dividend is made in quarterly payments of 44 cents for the months of April, July, October, and December. For a consumer staple beverage company, the payout ratio is fine. It's edging a little bit high at 70% of earnings and 73% of free cash flow. However, this is typical, and this has come down a little bit over the last few years. It's a safe dividend. Simply Safe Dividends provides a safety score of 70. And Coca-Cola has a fantastic track record of dividend growth, paying a growing dividend for 59 years. The 5-year dividend growth rate is 4%, not crazy, but it's reliable. Coca-Cola has seen its revenue decline over the last decade, although it's picked up some these last few years. In the last 12 months, they've done $41.3 billion in revenue, and this is down from $48 billion 10 years ago in 2012, but it's up from $36.2 billion made 5 years ago in 2017. But it's not a great looking trend. Now let's compare that to the peer PepsiCo, which has grown its revenue from $65 billion in 2012 to almost $80 billion in 2021. And for shares outstanding, they have been on a slight decline over the last 10 years. In 2012, there were 4.58 billion shares outstanding, and in 22, they're sitting at 4.35 billion. And it's good to see that shareholders have not been diluted over the last 10 years. So let's try to figure out a fair value for Coca-Cola and determine an acceptable buy price. I'm going to tell you, this won't be pretty, but if you're considering buying shares of Coca-Cola, it's best to go in these things with eyes wide open. Now, what I do is I take the average of 6 different valuation models, with no one valuation model being perfect. The first is Graham's revised valuation. The second is the dividend discount model valuation, or the Gordon growth model. Third is the discounted cash flow model. Next, we use a dividend yield theory valuation. Then we use a PE mean reversion valuation. And I also factor in the average analyst price target. And what I do is I take the average of these 6, and this helped me determine my fair value. And then I can apply a margin of safety to determine a buy price. And I want to remind you guys, this is my acceptable buy price. I wouldn't go just by this alone. I would do some further due diligence, no matter how these numbers come out. Here is our valuation spreadsheet. I put in the ticker, KO. This gives us our share price at $56.02. I've added in the dividend, which is $1.76 annually at the time of publishing, giving us a yield of 3.14%, and the forward PE of 22.4, and a forward earnings per share of $2.50. First, for Graham's revised valuation, I'm assuming a growth rate of 5.5%. This was projected by analysts at Yahoo Finance for the average growth rate for the next 5 years. Current yield of the 20-year AAA bond is 4.68%. This has been on the rise with interest rates, and that brings the valuations of this model down. And from this model, Coca-Cola is coming in a bit under $30. The estimated value here is $29.38. Next, let's look at the dividend discount model. The historical 5-year annual growth rate is 4%, and the dividend growth has flattened some. The last increase was 4.8%. Going forward, I think growth will stay in the low single digits, and I decided to go with a 3.5% dividend growth rate, and I'm using a 9% discount rate. This gives us a fair value of $33.12. Let's look at discounted cash flow valuation. This one's a little better. I assumed a growth rate of 4% and a 2.5% perpetual growth rate and a 9% discount rate. The current free cash flow is about $10.3 billion, and their outstanding shares are about $4.35 billion. The estimated fair value for this model comes out to $39.87, just under $40. And out of the 3 models here, I like this one best for Coca-Cola, the cash flow. Now, the next 2 valuations are relative to Coca-Cola. The next one, we're going to take the comparison to its 5-year historical average yield, which is 3.16%. This versus current 3.14%. This is basically the same, although it sure felt like Coke was yielding under 3% for longer than the graph shows there. And then let's look at the PE mean reversion valuation, and this is simply calculating what the current price would be for Coca-Cola had we used its historical 5-year PE as opposed to its current PE. Well, not guaranteed. These things often do revert to the mean. And the historical 5-year PE is 24, and the current forward PE is 22.4. If Coca-Cola was trading at 24 today, it would be priced at an even $60. Now, if you must buy an expensive stock like this, I do prefer that it be below its average 5-year PE. Finally, I factor in the analyst's average price target. Wall Street seems to love this stock. Its average analyst price target of $69.81. I do have to wonder if some of these need to be refreshed due to the recent drops in the last couple months, but as of now, this is where it stands, and I'm not crazy about using this valuation in it. But factoring it all together, I believe Coca-Cola's fair value is estimated at just under $48, and that's about a 14% drop from where it's at right now. And remember, this fair value is being propped up by that PE mean reversion valuation and that analyst price target. And if we took out the price target valuation, the fair value is $43.61. Please don't assume these assumptions are correct. I could be way off. The calculation could be wrong somewhere. Now, if we assume no margin of safety, that would give us a buy price of $47.98. If we had a 10% margin of safety, this would give us a target buy price of $43.18. And a 20% margin of safety would give us a target buy price of $38.38. If you wanted to be really conservative and go with a 30% margin of safety, well, Coca-Cola would have to drop about 40% from here and be $33.59. And I think I would probably be backing the truck up at that price. But for me to seriously consider buying Coca-Cola, I think I would be okay paying fair value for this brand. I did some math, and if you wanted to get Coca-Cola at a 3.5% yield, it'd have to drop to $50.28. And at a 4% yield, it'd have to drop to $44. And interestingly, my fair value comes out right between these two, and that's where Coca-Cola starts to become compelling to me. For current income, it's a safe and growing dividend, and if an iconic brand like Coca-Cola is anything, it is reliable. But at this time, for me, too expensive, and it's only expensive based on the brand recognition and moat and not anything to do with its fundamentals, in my humble opinion. This is a highly profitable company, and they do pay a ton in dividends. So are you a Coca-Cola shareholder, or are you considering buying shares? Let me know down in the comments what you think of this company as a dividend investor. And guys, I hope you found this helpful. If you could, please smash that like button. Also, do check me out on Twitter at DivGrowthIncome. Love connecting with like-minded investors. Thanks for watching, guys. Until next time, keep investing.